All right, you guys, thanks for checking into Living Coastal in Ventura. Today is September 17th, and we're going to go over the September data, which is really what we're collecting is August going into September. This is the most critical time of the year for data for 2025 in Ventura, Ventura County, and for the city of Ventura. The reason it's so critical is because when we're going into the fall, what happens in September, we can really anticipate what we're going to see in October, November, and December. We don't have a crystal ball, but today is so telling. And meeting with some of our brokers and lenders this week and last week has been really exciting because we really feel like we know exactly what's going to happen with 2026, and we're going to get into it in this video right here. Thanks so much for watching, you guys. My goal here today is just to give information. If you guys live here in Ventura, most of my fans or people that watch, viewers, live here in Ventura, Ventura County, are familiar with it, live in California. Some people are out of state. If you're coming out of state, you might really learn something about our community here. But really, it's great for people that are living here, that are considering moving, migration. Maybe they're going from a rental into a first-time home purchase. Maybe they're downsizing. We recently just sold on a pretty incredible property, kind of one of a kind in Ojai Hermitage, really high-end property for someone who is downsizing. For a lot of folks, the maintenance of bigger ranch-style properties, multi-level properties, they get too much as people get to their 70s, 80s, and 90s, and they need to downsize. Then that's where our middle market comes in, and that's why this data is so critical. Showing a property today with a colleague of mine, we had an off-market property. We're getting a lot of off-market properties right now. And we were showing this off-market property, and I let them know, I said, look, so first-time home buyers, you guys are shopping for this. We've got retirees that are downsizing into this, and we have investors that want to be able to take this 1.5 unit and add an ADU or garage conversion for income. So it can be very competitive depending on the neighborhood and price point, and that's why this data is so critical. So thanks again so much for watching. What I'm going to do now is I'm going to get into the city of Ventura data. I'm going to talk about how this month or August was so significant compared to all the data runs that I did. I didn't do one for every month, a video for every month, but I did pull a data poll. I might even pull those up on videos just so they can live there, so you can go back and reference. But I'm going to reference some of the previous months and some of the price points. I'm going to tell you guys about what price points we saw things fall off and what type of reductions we had. And it's actually pretty exciting for sellers right now, even though we don't want to celebrate the selling so much, or the market doesn't want to see prices kind of come down. That's what we're looking for, affordability. But the good news for sellers, and we kind of need this sometimes, is we're down to 199, which is great in inventory. The inventory went up as high as 210. It's been between 204 and 210 and 202 for the last 4 or 5 months as far as the city of Ventura, which is 4 times what it was a year and a half ago, and maybe even a year ago, where we had 54 properties. That was like 1 or 2 properties per neighborhood, and that was it. So that's what we saw after the pandemic pushed things up. But when the rates went up, we saw it kind of level off a little bit and shoot back up again because we saw sellers pull out. The big inflection that we're seeing with these off-market properties is sellers know we're not at that peak. We're past peak. We've already seen 5 or 10% reductions. Expires and cancellations, there's a ton of them, because you had 4x the inventory, and then all of a sudden you've got properties where people were maybe 10 or 20% over market value, thinking that because there's only a scarcity mentality that they were going to get the pie in the sky price. They're not getting that. Not only are they not going to get that, but going into 2026, things might reduce even a little bit more. Now, if rates are being cut, how is that possible? We're going to get into that. So Fed took the 25 basis point cut today. It was already baked in, so the mortgage interest rate really isn't coming down that much. So it might sound counterintuitive. It might sound counter to what the popular narrative is. If interest rates go down, it's going to rocket back up. We don't think so. Lenders I've been speaking to, we've seen so much happen with costs and inflation in all areas of life that the economy is struggling right now. It's recessionary. It's almost deflationary. So what we really think is going to happen is we're going to see those motivated sellers, the ones, okay, we're past peak. We know what we can get for it. Let's just get that price and sell because we're ready to move. We're going to see the rate come down a little bit. So we'll see a little bit of affordability in price. We'll see a little bit of affordability in the interest rate, and we're going to see movement, but we're going to see a stabilization. What we're seeing right now is normalization. We're seeing a normalization in the market. This is a good thing because for everyone that lives here already, we're going to see movement. If you're a move up buyer and you're trying to get that house up on the hill, you're trying to get a house with a pool or a view, the goal is going to be more reachable. If you're someone who needs to downsize, the rate's going to be better and more palatable so that you can sell that house to maybe that person. So it's going to be more like trading places. We're going to see a lot of that. First-time home buyers, you've got to humbly lean in because inflationary long-term, 7-10 years down the line, that's when you're making your move up. Right now, if you're a first-time home buyer, get qualified, buy what you can buy. I had someone recently, they were looking online calculator, thought they were going to qualify for 650. They didn't. They qualified for 450. But guess what? You can get a condo for 450. 650 is a nicer condo, maybe a better part of town, but get the one that you can get. The price is coming down, the rate is coming down. The rate comes down anymore, you can get a refinance, build your equity, 5, 7 years, 10 years, and then do a trade up at that time. So most people who own these great houses on the hill, that wasn't their first home. Don't be afraid to get the starter home if you're a first-time home buyer. So this is a lot of kind of ranting, but I wanted to give you guys the goods of what we're seeing, what the projection is. And here's the interesting data. So this is the stuff that we're using to back it up. So in the price, in the 600,000s and under in the city of Ventura, we have 34 actives, 16 went into escrow, and 11 were closed. So what's powerful about that is that it's getting absorbed, but that active number is up for the low price point. We hadn't seen that. We had seen the absorption going stronger. So we're actually seeing more availability for that first-time home buyer under the 600s. And that number, if it goes up at all, the fact that it's there and it doesn't get absorbed, that means those prices will come down simultaneously with rate drops. This is a good thing. This is good for affordability. And then the thing that was good for the sellers is that it's not that inventory isn't running out of control yet. It's still at that 200 mark. But for next year, if that inventory goes up, we're really going to know what happens with prices. But we're going to be watching that the next 3 months. So stay on this channel. Okay, the 600 to 800 range. 25 properties for sale, 12 absorbed into escrow, and 16 closed. That's pretty good. That's pretty good. Almost half to a third of what's happening there. 800 to 900, that was our strongest price point. Almost perfect absorption. We were seeing 20 properties on, 20 under contract, 20 closing. This month, we saw 27 available, 12 pending, and 14 closed. So we're seeing that inventory number go up in that price point, which is our strongest price point. So very interesting. August, however, you guys, August tends to be that slower month. That's the transition month of people doing summer activities. Maybe they've already purchased a home, they're moving, they're going back into school. So people don't do a ton of purchasing in August. They might do the purchasing, but not shopping as much. Tend to see a little bit of a slowdown. Things really pick up in September. So when people start shopping again, September, October, the seasonality of Ventura, Ojai, Camarillo, it's real. So you get into November, it really slows down. And from Thanksgiving to Christmas, it's like people don't want to even talk about real estate. We're talking about other things. We're talking about surfing, what are you doing for holidays? We're staying connected with our friends, family, and clients. And if people are really hungry, we're out hunting for them. And buyers do well during that time. And sellers, if they really need to sell, they're going to be on the market selling. So that's something to look out for seasonality. So going into our next price point, 900,000 to 1 million, 17 properties for sale, 7 absorbed into escrow, 5 closed. So that's a thinner amount of numbers. We were seeing more in that price point in the past. We were seeing more like 8, 9, and 10, sometimes even 5 or 14 properties closed. So that was our really strong kind of middle or lower middle, and not to say classes, but middle market. And then from 1 to 1-2, 18 active, 12 pending, 11 closed. That's pretty solid. So from 800 to 1-2 is really our strongest place. Like 800 is really where your single family entry level home is. There's a few that go into 750, but a lot of times if they're 700 or 750, they're really not worth it at that point because they're going to need like 150,000. There's something more than just the repairs that they need. that they're selling for that low. So you're better off getting into that 8 range. 8, you're still fixing. You can get something quality in the 9s, but a lot of times the 9s, if it's a fixer, it's going to be, maybe on the house, maybe above the college, and you'll need that extra couple $100,000 to get it to that 1, 1, 1, 2. But that's the bulk of the properties are going to be to 1, 2. And very consistent with what we've been seeing, 1, 2 to 1, 4, 15 properties for sale, 5 into escrow, and only 2 closed. Now the 1, 4 to 1, 8 was stronger for its price point, not than the others, but for itself, 1, 4 to 1, 8, it's a big range, kind of the 1, 5 range, 19 properties for sale, 3 pending, 5 closed. So at least we saw some activity there. We're seeing above 1, 4 in Ojai and Ventura and Camarillo, not really seeing a lot until you got to 2 million, until you got those really high quality entry to luxury properties. But here's where things really get thin. From 1.8 all the way to 4 million, only 2 properties sold. So what does that tell you about the luxury market? Where is it? Where is it? It's there. They're sitting there. They're ready for someone who wants to buy. But you've got at the 2 million range, 8, at the 2 to 2.5, 10, at the 2, 4, 2, 6, 6, 3 million. You've got another 6 properties, 3 to 3, 5, 10 properties. You've got like half the inventory is in luxury and 2 sales in August. That's it. Now you had about 6 go pending, but in those price points, let's see, the 1.8 to 2 to 2.1, 8 properties active, 2 pending, 0 sold, 2.1 to 2.4, 10 active, 0 pending, 1 sold, 2.4 to 2.6, 6 active, 0 pending, 1 sold, 2.6 to 2.9, 6 active, 1 pending, 0 closed, 3 to 3.5, 10 active, 2 pending, 0 sold, 3.5 to 4, 5 active, 0 pending, 0 sold, 4 million and up, 1 in escrow. So out of those, let's see, that's, about like 50 homes, and there's only, 6 or 7 going to escrow. So if you're a luxury seller, if you're up there, a lot of, especially with the luxury, with seeing what we saw in the pandemic and when I talked about that squeeze of the raising interest rates where you have sellers pull out and then you really got that push, people have an idea that their home's worth so much more than they are. And we're seeing, decline in activity, we're seeing uptick in inventory, and we're likely going to see, interest rates and prices come down simultaneously without pushing the bubble up. It's contrary to what people are going to say. Interest rates go down, the prices are going to rock. No, they're not going to rocket to the moon, because they're going to do a slow cut pace. And we've got the recessionary effects that we're going to have to deal with also. And there's no blaming, one side or the other. This stuff is happening. They both participate in what is going on right now. So here we go. All we can do is look at the data, identify our dreams, figure out where it is we want to live, what can we afford, and how do we execute. If you're a seller, you've got to be real with these numbers. You've got to be realistic. Do you need to sell right now? If you were going to wait to sell, you can wait till next spring and see if that rate comes down and it actually does help push up the market and maybe the inventory doesn't go up. That's a possibility. I don't know everything. Or, maybe it's a couple of years. I talked with a seller. He had a really big idea. He wanted, $850 for a property. And I said, what? I think you're probably at $650 right now. Realistically, if that, if you can hold it and you have income, hold it, because we know, 5, 7, 10 years, it's going up. The thing is about our monetary policy is that as long as they have to pay the interest on our national debt, they will print money. If they're printing money, we're going to have inflation. We're not going away from that. That's the one thing you got to remember. And that's why real estate's always a good investment long term, but you can only do what you can do. If you kind of get what you can afford now. So if you're a first-time home buyer, go for it. If you're a seller, now's probably the time. Get it going maybe in these next 3 months while the inventory is still manageable. Next year could be a tough year for seller, but it's going to be a really good time for buyers. That's why they call it a buyer's market. There aren't as many buyers. You're not going to see everybody doing it. That's why it's going to feel wrong. But those are going to be the best time to get deals. especially, above that 1.4 range. If you have something that's like a 1.8, 1.9 property and you can get it for 1.4, 1.5, you get 300,000 off. Plus, as it goes forward, as they cut the rates, you could even get a lower interest rate going forward. So there's a lot of great strategies, to do these things. But really, I encourage people to, shop within their affordability, be aware of insurance costs, fire insurance, and everything else, and all those inflation. But we are seeing deflationary in services and other areas of the economy. So this is some good data. Local city of Ventura. I will continue to do a county update, get a little wider with this data, and do individual city updates. So look out for that info. I'll put my opinion on it. Again, my opinion isn't set in stone. If I'm wrong, I'll tell you I'm wrong. Or if I learn something from video to video as we collect this data, or something new comes to light, I'll let you know. So I always announce the dates when I make the videos, so just be aware that those are sensitive to that time. And at this point in time, what we feel is going to happen in the short term, the next 3 months, is we're going to see a lot of what we've seen. And going towards November, December, I think the inventory is actually going to come on lower. But I think we're going to have a whole bunch of new sellers in 2026 and the leftover sellers that are expired. Keep in mind, these active numbers around 200, those don't show the expireds and the canceled that pulled off. So really, we could be at 250 or 275. There's a lot more there. And if they show up in 2026 with the new ones, we're going to see the inventory go up. So even with the rates coming down, as long as there's volume, we'll see prices come down. But that's two ends of affordability for buyers. But keep in mind, the best buyers are the sellers. So if you've got to do special contingent offers, shopping for off-market properties is great. You can get that under contract while you sell your house. You get your house sold off-market under contract and really be ready to purchase. Again, another one, and that gives me another idea, is that one of our partners actually does bridge financing. We've got another one that does cash, so you can purchase with cash and you contract with that company and they do your loan. There's a lot of strategies. People are doing it. It's not new. Not every company out there does it, but you want to have an arsenal of services at your disposal so that you can execute on these plans. You guys, thanks so much, and continue watching, and we'll see you on the next.